people underestimate the importance of taking risk. They think you can have a decent return without actually taking any risks. With interest rates being moored at zero for the major OECD economies, if you don't take any risk and do not move up the risk curve and stay in cash, you will experience negative real returns because inflation is above zero, and therefore without taking any risk, you will lose money. We are very, very, very adamant that active management is more important than ever. The investment industry has rightly, in many ways, often been accused of being too short-term, and that's because there's been too much short-term strategizing going on. So what we're trying to do is try to identify the really long-term secular trends and stick with those. We've really changed the way we do business. The client dialogue is right up front. We need to see whether there is something that we can do to help. When it comes to active management, we have moved aggressively towards a much more active approach, be that in terms of concentrating our portfolios, be that in terms of creating strategies that are much more unconstrained, more like investing 30 years ago when people were much more unconstrained, or be that indeed in moving into the alternative space, be that the hedge fund space or the very illiquid alternatives that are out there, such as infrastructure debt or infrastructure equity. If an active manager can deliver 200 or 300 basis points after costs on top of that very low beta return from equity or fixed income, that is a very attractive value proposition, and we think the only way that fund sponsors and private individuals can really fund their own liabilities.
You've got to look for a company that's been around for a long, long time, but also a company that's committed to supporting individuals and their advisors and their trustees for the long term. So if I think about Allianz and Allianz Global Investors, we've been in this market for decades. We've had a dedicated risk unit that's been set up and very well resourced well before the financial crisis. Managing liabilities, whether they're individual or pension fund liabilities, is part of our DNA. It's what we've been doing. And then coming up with solutions which are relevant for the current economic environment, we dedicate a huge amount of research, not just economic, but also behavioural and risk research to coming up with those right solutions. It's absolutely core to our strategy to be available to support people and companies and trustees as they think about how to come up with pension solutions. It's a central part of our strategy. We devote a lot of resources to it, not just in the investment side, but in communications and support. I think it's vital, but I think also it's a huge opportunity, but with that opportunity comes responsibility, because these are individual lives. We've got to think about scheme design, plan design, income solutions that will stand the test of time and volatile and uncertain markets. So we ought to take a very, very strong responsibility, as well as seeing this as an important business opportunity for us.